The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at some of the trends in these grain and livestock markets as we're getting into the first part of May, of course, weather, planting progress having an impact here on the grain side. While you look over at cattle, and cash continues to really drive things there, setting some more records last week and seeing futures setting some records here this week already as well. Let's dive into some of this and talk about what we're seeing for trends in these markets. Tyler Schau, agmarket.net, joins us here for a conversation today on Market Talk. And Tyler, it is good to talk with you again. How are things up there in the northern plains? It looked like, according to USDA's estimates anyway, folks in North Dakota making some progress, corn, soybean, and spring wheat planting here, Tyler.
Yeah, things are good up here. You know, we've really had very little delays for any of the crops. You know, a lot of the producers were waiting until we hit May to start sticking some of the row crops in the ground, but made really good headway on some of the small grains. I talked to a producer in southeast North Dakota today. He's pretty much done corn and beans, and he said there's a lot of people in the area that are in the same boat. So kind of, you know, we've got a lot of varying factors out where we live, a lot of different geographies that play a role in some of that. But I would say we're making a lot of headway. We did come into this planting season pretty dry, or on the drier side for most of the state. So the fact that we haven't had a lot of rain events has helped the crop grow in the ground fast. Now we're going to need to see some of those rains to see some development there.
Well, and I know that planting pace has been definitely moving along as well as you go into the central corn belt and the western corn belt more. And so, I mean, let's talk about this. I have to think that at this juncture, weather and planting progress, outside of, you know, other factors here, is just kind of a bearish blanket on these grain markets right now. We're just kind of chopping around here this week, maybe doing a little bit of chart damage early on in the week. I mean, talk about what's trending for you in this grain trade right now.
Well, I think you hit the nail on the head. You've really got no story of any type of planting delays out there to slow this thing down. You factor in the idea that, you know, we are making headway. You know, the May or March 31st planting intentions report showed, you know, over 95 million acres of corn. There's been some chatter over the last few weeks. Maybe that'll even hit 97 million acres. And I think just the weather and the pace at which we're putting the crop in the ground, the fact that soybean prices have not really given the producer any reason to change the mix of acres as the crop's going in the ground. I think that's kind of got the market spooked that maybe we are going to see even more than 95.5 million acres go in the ground. So, you know, that's something the market's paid attention to. You know, there was the demand story out there, the export story. There's a lot of folks looking for the WASDE report next week to show exports increased again, and maybe even a decline in that ending stocks. But over the last week, there's kind of been a shifting narrative to where maybe the USDA lowered their yield too much in the January report, and actually there's more corn out there. And so there's a lot of uncertainty. You know, one of the things that I try to remind my customers is when you see markets move the way they have with a lot of erratic behavior, that's just a sign there is uncertainty. And everyone's kind of moving from one side of the boat to the other, and it's causing these big swings in these markets like you've seen in July corn or in the July-December spread over the last few weeks.
Well, as we're kind of in that roll period here, and a lot of this focus is really shifting into the new crop side of the grains here and more. I mean, when we have choppy markets like this, from a risk management standpoint, I know it doesn't necessarily help in many ways, but it's that busy, odd time of the year. We have this every spring where producers are busy and these markets just kind of chop around, and maybe folks don't pay as much attention to their marketing as they would at other times of the year. Right, Tyler?
Yeah, it is tough to get producers on the phone this time of the year. They are busy. They're running to try to get this crop in the ground as fast as they can. They're dealing with breakdowns, getting stuck, you name it. And sometimes it's easy to lose sight of where you need to be. Um, the other thing, the common conversation we're having with producers, they don't feel prices are at a level where they feel comfortable laying into some hedges at these spots. Full transparency, ag market's kind of been on that side of the boat as well. That we think, it's still early May. There's a lot of growing season left. Yeah, we might get a lot of acres, but we're still going to need to see some really good yields to get us back to a spot where we feel like the carryout's going to be somewhat burdensome. So I haven't been in too big of a hurry. Now, if we're having this same conversation on July 4th in 2 months, then I'm probably going to be kind of concerned. But I do think we're going to get a couple months where we're going to get at least one, possibly two weather scares that give us those opportunities again. And after this crop gets in the ground, I think that's when we got to start looking at being aggressive, getting some stuff on.
I would say, and you can, share your thoughts here, but even if we have a little bit of chart damage, spread damage here the next, couple of weeks, and maybe we dig that hole a little bit deeper, I wouldn't say it's anything to get too overly concerned about here in this window. To your point, we got a lot of growing season in front of us, Tyler.
Yeah, we do. I mean, that's the we've not. I mean, I don't want to alarm any bells, but there's chatter out there about possibility of dryness settling in the month of June and July. I try not to get too much backyarditis where I'm at. It is dry. We have been dry since late last summer. And when I look at the forecast, it's hot and dry for the next 10 days. This weekend, we're looking at temps into the 90s, high winds. We had terrible winds the last 2 or 3 days. It's important for me and my seat to not pay too much attention to what's going on in my own backyard. But it is a concern of mine that as we move forward, that the dryness does settle in, and if it does and it settles in over the western half of the Corn Belt, I think the story or the narrative changes dramatically from what we're talking at right now, which is there's a abundance of corn in the western Corn Belt still in storage. And that's evident just if you look at basis levels. Where I'm at, where the local ethanol plant's 80 under for nearby delivery. As you work your way south into South Dakota and Nebraska, it doesn't improve much. However, as you move east, talked to a grower in Indiana yesterday, said they're looking at 25, 30 over for nearby delivery. So again, it's a tale of two different sides of the Corn Belt. Where basis is strong in the east, it's very poor in the west. It just tells us there's a lot of corn available in storage in the west. But the second side of that is if it does dry out in the west, there's a lot of storage, and farmers are going to get pretty tight-fisted with those bushels if that does happen.
Give me some thoughts on this cattle trade. I know last week that 5-area market weighted average, the fed steer price was topping 220 per hundredweight, first time on record. The June live cattle futures Monday hit a new record, 213. I mean, this cattle trade, cash really just continuing to kind of drive the bus here, and just this market seems to continue to be supported really across the board, Tyler.
It does. That's the thing that we keep talking about. The cash market just keeps rolling. The latest data we had was 222 in the north, 218 in the south that got reported. So an average cash price in the 220s, like you said, the 5-area average over 220. Cutout values are incredibly high. You take out COVID year, box beef's as high as it's ever been. The feeder cattle deal, you got the August board tickling 300. So, I mean, who would have ever thought we'd be looking at $300 feeder cattle just a few years ago? So this market is strong. We know that the cattle aren't out there. They're hard to find, and what is available, guys. I mean, the other thing to think about, you talk about the 220 on the cash side for the fat steers. A lot of those cattle were placed back in, August, September, October, when that index was much, much lower. We broke there late summer, of 2024, and so a lot of those cattle were bought. And if they went on feed and they're getting sold at 220, man, those break evens or those closeouts looked awfully good. Cattle feeder's got a lot of money off of that, and he's looking to replace them and fill his pins up. So he's going to go try to get whatever he can get his hands on right now, and that's just keeping these prices lifted. In our opinion, the packers really got no bullets left right at the moment. Until this herd gets rebuilt and there's more cattle available, the packers really just at the mercy of what the feeder's willing to sell them for at the moment.
Tyler, final thoughts you'd have for producers either on the grain or the livestock side here today?
On the grain side, don't get too caught up in this sell-off. Like I said, we still got May and we got June. Again, we're having the same conversation 45 days, 60 days down the road. Now maybe there's a little more time for concern. Livestock side, I feel like every time I've talked to you, I'm a broken record. If you haven't done anything on some risk mitigation, $300 feeders isn't a bad place to start.
Tyler, if folks want to reach out and take a look at your guys' intel and more, I know they could do that very easily on the Ag Market website, can't they?
Yeah, check us out. There's a contact page. We got brokers spread out from North Dakota to Indiana.
You can find more details online, agmarket.net. Tyler Hsiao, always good to hear from you, sir. Have a great week, and we will talk to you again real soon.
Always good to talk to you, Jesse. Thank you.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.